My name is Rafael. Oh, there we go. Now we're recording. My name is Rafael Haciski from Johnson Kendall Johnson. As I'm speaking, I'll let Alexandra put the presentation up on the screen. As I said, JKJ is an insurance and risk management brokerage. We serve exclusively the long-term care industry, currently serving over 250 communities across 20 plus states. Alexandra and myself focus exclusively in the property and casualty world, which is that commercial business insurance. But JKJ also has a benefits group as well as a financial services group. We're headquartered right up the street from you guys down in Maryland, in Newtown, PA, which is right outside of Philadelphia. Proud to say that we are an independently owned brokerage with over 60 years of experience. We actually wrote the first CCRC in Pennsylvania back in the late 1950s. They're currently a client still today. And a little unknown fact is that JKJ actually is the founder of the 401k loophole. I'll tell you that story over a drink one time at the annual conference. Alexandra, I'm going to let you introduce yourself, and then we'll get this show on the road.
Thanks, Raf. And while I'm doing that, if Preston, Chet, or Bart, if you guys could put in to the chat here what your role is, because that'll help me make sure that when I'm answering some of these questions, I'm guiding them in a way that makes sense for each of you. So I am, hold on, let's get this up here. I'm Alexandra. So I've been with JKJ for a little over 7 years now, but my background before that was actually in IT consulting. So I started my career at Ernst & Young in their IT advisory group. I went on to do some telecom consulting, and then I found my way into this dark thing called the insurance world. So since joining the insurance community, I did pursue a designation specific to managing cyber risk and cyber insurance, and naturally gravitate towards all things cyber. So I do lead our cyber practice here at JKJ. And I'm very proud to say we actually were awarded Broker of the Year internationally last year in this space, and we'll be vying for it again this year.
Thanks, Alexandra. At a time where we're seeing headlines such as, Biden warns everyone of Putin's cyber attacks that are coming and all that stuff, we know that cyber is an ever evolving exposure. And from an insurance standpoint, what I can tell you is that, where originally it came from a general liability coverage piece, it became a standalone product years and years ago. And as a result, JKJ invested in Alexandra and her practice, as we knew that this was going to become an emerging exposure, emerging risk that folks needed to worry about, especially in the healthcare field. So what we're going to do today is we're going to sort of start high level and then drill down, ending with what we like to call it sort of the top 5 best practices. And I'm glad to see we have some IT folks on the call today, because I can tell you, as we've been going through renewals from an insurance standpoint over the last 12 months, 12 to 18 months, really, Alexandra has been pivotal in preparing our clients almost for deposition when they're going to be talking to the insurance market about what it is that your community is doing from an IT perspective, from a risk perspective, when it comes to cyber exposure. So let's start at the top, Alexandra. Let's just kind of focus on cyber incidents. What type of cyber incidents are we talking about, and what are the trends going on right now?
Sure. So, for my tech folks on the line, I won't belabor these, right? You're already very familiar with what would entail a cyber incident. So, of course, ransomware attacks, phishing, data breaches, denial of service, et cetera, et cetera. But from an insurance standpoint, and Raf and I do speak from kind of the insurance perspective on this, an unknown fact is it does actually also cover your physical records. So if somebody were to walk into one of your facilities and steal a filing cabinet of patient data, that would actually qualify as a data breach and would be covered under the normal procedures that would entail your cyber insurance program. So a little unknown fact. And yes, Bart, I will make this presentation available for you after the call. I promise I'm monitoring the chat. So please, if you guys have questions as we're presenting anything, please chime in. I'm happy to try to jump on them. And if we miss them, we'll circle back.
Oh,
So I've had, oh, thank you. Thank you. I'd rather this be interactive. I do these all the time, guys. So surprise me with questions. This is for you. This is not for me. I've heard myself, and Raf's heard me do this hundreds of times. So what else here? Physical security breaches I mentioned, and of course the unknown, right? What else is coming? Who knows, but we're going to end up having to be prepared for it. When we think about the landscape that really makes up cyber risk, at high level, it is truly anything that's connected to the internet. And at this point in time, it's estimated that's over 50 billion devices and processes, right? Every day with technological advancement, we connect more and more to the internet for efficiency and convenience. And more we broaden our exposures. And at this point in time, it's also projected that cyber crime through ransomware attacks and otherwise is projected to cost our world $10.5 trillion by 2025. We are on pace for that. It would make it one of the world's largest economies. And so a lot of attention, and you're going to hear me talk about this a few times from a regulatory standpoint, right? Like authorities, uh, domestically from a federal level, a state level, but also even international authorities are saying, hey, we really have to get our arms around this. It's out of control. When you look back on what's kind of transpired trend wise, really, this is, we'll say, in the last 10 years, data breaches dominated the news, and you all remember them, right? So, Target, Home Depot, right? The first really big, large scale data breaches that violated privacy laws and hit the news. Then, for a period of time, really continuing through today, we're seeing a lot of social engineering attacks, right? So, that's where you are manipulated into parting with money or information to somebody who purports to be someone they are not. So you do voluntarily part with it, right? They didn't actually come in and steal it from you, but they were purporting to be someone benevolent, whether it's a coworker, a vendor, a client, etc. And then, of course, ransomware attacks are just off the charts, really exploded during the pandemic, exacerbated by the at home workforce during the pandemic, especially at the early onset. You had people quickly working from home, companies laxed controls. We weren't using commercial grade devices necessarily. People might have had to use personal devices to connect. So, a lot of vulnerability that was certainly exploited by the bad guys.
Yeah, by the way, Alexandra, that's a good point. With regards to cyber liability, I think a lot of people hear that word and they just think tech, IT, et cetera. A lot of times it's referred to as privacy liability. And so while it's covering all of this techie stuff, when you boil it down, you're still also protecting the paper that you have on campus, health records, et cetera. So just because you're outsourcing your IT or outsourcing your medical records somewhere, it doesn't mean that your exposure does not exist. So keep that
Yes,
in mind.
so much of this is going to be regulatory driven, and you're going to hear that theme several times throughout this. So, just a few more statistics. I like to put a couple of numbers to things. So, back in 2020, as things were skyrocketing, right? Not only were the number of incidents occurring at a much higher pace in terms of frequency, but the severity of those incidents. So the extortion demands themselves used to be in the average of the tens of thousands of dollars before 2020, now hit six figures. In 2021, we finally have some good data from that year. Average demand now is increased to several $100,000. That was an early on statistic. That was about halfway through the year. The average came down a little bit towards the end of the year, but it averaged out still very, very high. It was predicted a business is getting hit every 11 seconds in a ransomware attack. And then this is something I will come back to again, because we're going to relate this back to how the insurance can help here. But the average downtime is predicted to be about 19 to 23 days. That sounds like a lot, right? Do you remember the days of dial-up internet and the agitation we all felt just waiting for the internet to come up? Imagine that feeling, but multiply that by 19 to 23 days. So really, really concerning. And I will tell you, I've lived these with many of my clients, unfortunately. And what I've seen is this. Number one, not too often is the entire network down. Usually it's a piece of it or certain devices, but or certain applications. So fortunately, it's not a total outage situation, but it can be. And two, I will tell you the downtime of whatever piece is down, whether it's the entire network or otherwise, this is about right. This statistic in terms of the number of days has held true. It's been about 2.5 weeks that I've lived these incidents and that these folks have been down. And that's a matter of how long it takes to really triage and figure out what's wrong, why it's wrong, how to stop it. What are our options? Can we fail over? Are our backups any good? We tested them. Do we have the equipment we need to fail over to? What's the most cost-effective solution? How long does it take to ramp up the backups? Or how long does it take to decrypt the file if we paid the ransom? All of those things take time, and it really does take about 2 weeks. In 2021, what became a bit more popular over 2020 was the number of zero-day exploits. And I know I don't need to explain that for the tech folks on the call, but we do have an ED on here. So just think of it as a software vulnerability, right? So it's not something you did wrong. It's built into the software. There was a vulnerability, a little hole, and folks were able to get through. So there's the number of instances where those were exploited doubled just year over year from 2021 over 2020. And then we're seeing more sophisticated levels of extortion. So where they used to just encrypt your network, pay me and you can have it back. Then it became, hey, pay me because even though you don't need me to decrypt your network, you've got these great backups you're going to fail over to. If you don't pay me, I'm going to release all your data on the dark web. And now we're even seeing other layers of extortion where they're harassing your channel partners, right? Whether they're harassing your residents' families, or even your vendors or your employees, and going to them directly and saying, hey, we've got your organization hostage. If they don't pay us, you're in trouble. And they're even sometimes print bombing, where they'll actually print one of the ransomware notes in your organization. So they'll actually have it physically manifest into your organization. So they're getting really sophisticated, really at any cost, to try to put you in a position where you're more likely to pay the ransom. And of course, all of these things are starting to draw a greater regulatory response, and we'll come back to that in a minute. So just a few more statistics here. I like to tell a couple stories. So this is all headlines that are going to be on this slide here and the next one. So this is $5 million settlement in a hospital data breach. So this was 2 years after the data breach had occurred. So I think oftentimes when we think about these incidents, we think about the there and then of the costs, but the regulatory piece of it, whether it's the FTC or HIPAA or PCI, whoever's coming in and investigating what happened, that fine or penalty is going to lag that event. So you may still be in dealing with an incident even years later. Blackbot is one that a number of you on the phone may actually be familiar with. This was towards the end of, I think it was 2019. Heading into 2020. They're a donor management database. So if you manage your donors on their online platform, you would have possibly had personal information about your donors. And they had such a system-wide data breach that it breached all of the donor information for all of their clients. So some of you may have been notified that you were involved in that. So that's an example of really a supply chain, right? We had centralized information, and that centralized database was hacked, which impacted all the downstream partners. This was a big one. UHS, this was in 2020. United Health Systems, all locations down at the same time with a ransomware attack across the country. And it's an example of really how cyber risk knows no geographic bounds. It is the only risk today that can impact all of your locations at the same time, even if you were geographically spread. Another example, General Baltimore Medical Hospital, also down with a ransomware attack. They had to shut down their emergency room and start routing patients to other locations. And a couple of really unfortunate examples of how these things can transpire into actually causing bodily harm to individuals or even death. In Germany, a hospital was down with the ransomware attack. They shut down their ER, routed their ambulances to other nearby hospitals. And in the course of that, a woman passed away because she was not able to get the care she needed as quickly as possible. Similarly, here in the United States, there was a couple that came to the hospital they had registered with to have their baby. They weren't notified upon entry that the hospital was actually down with a ransomware attack. The monitoring equipment failed on the infant, and the infant passed away from a heart condition that would have otherwise been detected. Really, really horrible stories, and I'm sorry to be doom and gloom. I promise we're going to turn this around into something more positive. But it's really an example of how serious this is becoming. And then just from a dollar standpoint, when I talked about those average ransom demands, here's examples of why. JBS Meatpacking, they were down and they paid an $11 million ransom. We're going to see CNA Insurance. They were an insurance company that was down for 3 weeks. Rafael and I lived this. They paid $44 million. That's what's really driving those really high averages on the ransom demands. Colonial Pipeline, you guys know that one well, right? I couldn't get gas for like a week. Paid $4.4 million. Fortunately, the feds were able to recover some of that. But this is where the Colonial Pipeline was a big turning point. It started with the SolarWinds attack, which we're going to have on here as well, SolarWinds, because that involved government agencies. But we really got the attention of our government with the Colonial Pipeline, right? Because that was our infrastructure. And that's one of the concerns we have with the Russia-Ukraine battle going on today, right? Are they going to target our infrastructure again, whether our utilities or transportation or otherwise? And so it's garnering a lot more attention than ever before. Additionally, all of these on this page are examples of supply chain risk, right? So Microsoft Exchange Server, I'm sure a couple of the organizations on this call probably still have on-prem Exchange servers. The Kaseya attack, that's the one in the bottom right, the SolarWinds, right? So examples of technology providers having an issue that then proliferates out to all of their dependent supply chain partners, which is their customers. So just one more statistic here, and then we'll talk a little bit, move on to a little bit of a different topic, but talking about those average demands. This is from one of those IT forensics firms that gets involved in resolving these issues. So in the green, you see what the demands were by quarter in 2021. So we were averaging in the $2.3-ish million range for average demands, and it drops to what's actually paid out on the right in blue. So they paid out average of 400,000 in Q1, 300,000 Q2, 200,000 Q3, little dip back up to 300,000 again in Q4. So demands are in the millions, but we are paying out on average in the hundreds of thousands.
And really, the hackers are getting a lot more intelligent day by day. I mean, it's almost as if you were robbing a bank and that robber was just sitting in the bank for a year and a half, not doing anything. And then all of a sudden, he or she decides to actually take some action. That's what a cyber hack happens. I mean, that's what happens. They'll go into the system and sit there and watch and watch and watch, and then fire away and start to exploit the data. That's the scary part, that some folks can be in your system already and you don't even know it. And I remember a conversation that I had years ago with a CEO, a very smart CEO, who for some reason said, we're a small CCRC. No hackers would come and get us. Isn't that right? And I kind of had a chuckle, and I said, well, you're actually a small CCRC, and that's why you're going to get hacked. So Alexandra, talk to us about who is being targeted right now from a cyber standpoint.
You're so right, Raf. For years, right? That's what everybody said. Oh, they're only going to go after the Home Depots and the Targets of the world, the big fish, because that's where they can make their money. But there's a quote that I really love that I think captures the situation perfectly, which is ransomware gangs don't care about your data. You're actually exactly right. It's that you care about your data, you care about your network, and that's what they're exploiting, right? It's not so much the value of what they're taking from you anymore, other than how you value it, as opposed to what they can get for it elsewhere. So it's really leveled the playing field. So a few more statistics here. Again, this is another report from 2021 from a different forensics firm, but who's being targeted? We'll see top 10 impacted industries, and this is just all types of cyber incidents: email compromises, data breaches, ransomware attacks, etc. Healthcare was the second most targeted, almost tied with financial services there, and just falling below professional services. And then who actually had the most ransomware attacks? You see healthcare actually drops to third there. Manufacturing comes up in the ranks, but healthcare is still a really, really big target for ransomware. In terms of what types of exploits, right? So how are they doing this? Again, I mentioned this before, 0 day really off the charts in the last year. That spiked up. Still a lot of phishing attacks, still taking advantage of third-party vulnerabilities and social engineering. And then again, let's take a look at that average ransom versus what's paid out, the demand versus what's paid. So demand in green, paid in blue, and you can see that by industry. And when we get down into healthcare, you can see the averages are in the millions still on the demands, and in the hundreds of thousands for the paid.
So obviously a lot has changed over the last 18 to 24 months, obviously because of pandemic and whatnot. I remember our IT director coming to me and sort of throwing his arms up in the air saying, I have one firewall before pandemic and now I have 120 firewalls. The exposure is changing by day. And again, I'm going to reference that headline that I saw this morning with Joe Biden saying expect cyber attacks from Russia. So looking into 2022 and beyond, what can we predict and expect from a cyber exposure standpoint?
Yeah, I mean, you nailed it, right? Well, I don't know, but it certainly seems like we're going to have some residual collateral damage related to the Russia-Ukraine conflict. So there's already been notable uptick in activity, right? So we're seeing a lot more hacker activity out there in attempts. Not quite the success rates that we're fearful of, but that certainly is coming. Even in the last 2 days, we're starting to hear about some more large scale successful ransomware attacks. We've been seeing over the last week or so large attacks on some of the auto manufacturers, parts of Bridgestone, parts of Toyota. So you're seeing it's coming. The wave is coming, and it's a shame because right at the end of the tail end of 2021 and heading into 22, the number of attacks were actually on the downward trend. And it was really because organizations have been improving and bolstering their cybersecurity, right? We were doing better. And then now we're seeing them start to uptick, and we're expecting a little bit of an upswing on that, unfortunately, related to this. Arete is one of those IT forensics firms, and they had issued in their report some of their projections, and I thought they were really good. So the first one was, hey, how are they going to continue to force ransom payments? So with all of this oversight from government now looking at these attacks and trying to get their arms around it, they're going to try to avoid law enforcement. So the hope is, outside of this Russia piece, that generally speaking, the attacker landscape are not going to target infrastructure as much, and maybe try to be a little more under the radar, a little less public shaming, but probably still utilize all those different tactics we talked about in terms of trying to pressure organizations into paying. We're going to continue to see international collusion in a positive way towards actually trying to resolve this, right? So sharing of information, sharing of understanding of harboring, what it looks like if you're harboring a known criminal, and whether or not we're going to be sanctioning each other, trying to get our arms around the money laundering infrastructure, right? So what's going to happen with cryptocurrency? Are we going to see more regulation around that? And then, of course, just more of the same, which is continuing to take advantage of the companies who are not up to snuff from a cybersecurity standpoint, right? If we're not patching timely, if we're not managing access, if we're not deploying, proper technologies to secure the organization, and we'll go into a few more of those.
So, when we're preaching insurance, Alexandra, a lot of times we like to talk about insurance utilization. The insurance program that we have in place should be the last resort. And there should be protocols in place prior to having to tap in, because the insurance is coming to pay a claim when something bad has already happened. Now, we know for a fact that we need to kind of continually be doing fire drills, pressure testing the system, things of that nature. And now I think this year, more than ever, we've found ourselves almost telling that story to the underwriting insurance community during the renewal process. So how do we manage that cyber risk, and what is the way that we're presenting it to the market just to put us best in class from an exposure standpoint?
Yeah, I mean, we spent we've been talking for about 20 minutes, and I feel like it's a lot of doom and gloom. And I don't like to be one of those cyber speakers that just tries to scare everybody on the call, right? I want to give you tangible takeaways of how you can actually effectively manage cyber risk. So first, I kind of have a formula here of a couple different components to really what makes up cyber risk management. So component number one is a mixture of security and privacy, cost, and convenience. And so what I mean here is that's going to be a different balance for every organization. And the example I always love to give, right? In order to give access to anyone, whether employee or otherwise, to our network, it would be the most secure if we required them to not only enter a password, but to do a retina scan, maybe a fingerprint scan, a DNA test to fully authenticate and validate the authenticity of that user. But we don't do that in real life, right? That would be expensive and remarkably inconvenient. We wouldn't have any efficiencies. It would be a problem, right? So we don't do that. We find some balance somewhere in between. And the balance has shifted, where we used to have one password for the last 10 years, right? Now we're adding multi-factor authentication and added layers. And there's a cost of doing that, and there's an inconvenience in doing that. But you can see that puzzle starts to shift in time. And additionally, my IT guys on the phone, I hope you'll appreciate this. Cyber risk is not just managed by buying technology. It is not just an IT problem. It is a mixture and a balance of people, process, and technology, right? So the example I like to give here, because I think most people recall that Target breach that I had brought up before. Everyone remembers that Target had this big breach. Some folks are privy to the fact that the way the breach actually occurred was through Target's HVAC vendor. So it wasn't actually Target's own systems that failed. It was their HVAC vendor who had access to their system. So the bad guys went into them because they certainly didn't have the same level of sophistication of cybersecurity as Target, got in and made their way into Target. Target had the right technology. They had an intrusion detection system. The intrusion detection system did its job. It detected the intruder. So the bells and whistles went off and said, hey, we think somebody's in here who's not supposed to be. And where Target failed was on people and process. No one reviewed the alert. No one did anything about the alert. So perfect example of how it's not solved with just technology. There's so much more to it. And lastly, Raf, as you just mentioned, right? Insurance is part of the puzzle. So we try to do all these things to prevent an attack and prevent an incident of any kind. But this is why you buy insurance, because bad things still do happen. And you want to be able to have that cushion in place to provide the financial resources you need. Beyond the financial resources, it comes with other sources of resources and services that are so essential to getting through a cyber incident. We'll talk about in a little bit. But in general, in managing cyber risk, the goal is not to be cyber secure. There is actually no such thing. There's no certification we can get. There's no stamp of approval where we can say, yes, we did it. We can go to bed at night knowing we're cyber secure. But there is the concept of cyber resilience. And that's what we're all building towards, which is that we could sustain an incident and recover from it, minimize the impact, and actually move on and continue operations. That is more important than just trying to prevent it. It's the entire resiliency platform. And of course, if you found yourself in a court of law under regulatory or a class action or anything like that, you're going to be held to what's called the reasonableness standard. What would have been reasonable for an organization like mine to have done, both in terms of the response to the incident, but also from a prevention standpoint? Is it reasonable that we've never done a vulnerability assessment? Is it reasonable that we've never conducted employee cybersecurity awareness training? And that's a moving target. So think about if you had given your information to a company just like yours, what would you expect them to do to safeguard that? I mentioned supply chain risk several times in the examples of how cyber risk is evolving. So how can we manage that piece of the puzzle? And this is kind of a simplified version of it. It's going to sound a little bit easier than it really is in practice, but these are the things you need to think about. Coming up with an inventory of who these folks are in your supply chain. So especially from a vendor standpoint, who are they and what do they have access to? Whether they have actual direct access into our systems in some capacity or our information. What information do we give them? And how do we control that access? What safeguards are in place? How do we remove it if we need to? And then it all boils down to, and Raf, you as an attorney will appreciate this, the contracts, right? What's in the T's and C's? Who's responsible when something goes wrong? Who's responsible for the confidentiality? What do they do? How do they indemnify us if something goes wrong? And what insurance do we require one another to be carrying to resolve these incidents? Now, I mentioned the insurance piece. So for my IT guys, and I know you probably don't get too involved in the insurance just yet in terms of the actual coverage. You're getting involved in the renewals, I'm certain, but what does it actually cover? So I'm going to give you cyber insurance 101 here. So it is one piece of your risk management strategy, right? So it has services and financial risk transfer. The key bucket, and I've got this really broken into 4 buckets for us, is incident response. So if we suffer an attack, it's going to immediately align us with a privacy attorney. So they call that a breach coach. That attorney is going to enact attorney-client privilege on the things that we're doing, which is really essential, right? If we're in a highly regulated environment, which in healthcare we are, we want some protection that we can move and shake as we need to and figure it out without being under the eyes of the law just yet. So attorney-client privilege is going to be enacted. We're going to get the attorneys involved. They're going to really guide almost every step of the way. They're going to engage IT forensics, as I mentioned. Forensics is going to work right with our IT teams, insourced or outsourced, to actually triage the incident. What happened, how it happened, stop the bleeding, review the logs, quarantine this, etc. And then part of incident response may also include a communications component, whether internal, how are we communicating to employees? What are we telling them? What are we telling residents? Or even external, what are we telling residents' families? What are we telling folks outside of the organization or local news about what's happening? So that PR piece would be covered if we engaged a PR firm. And then notification, right? So this is that letter that we've all gotten at some point in time that says, hey, your information may or may not have been breached. That's in accordance with privacy laws, and that they vary by state. All 50 states have their own. So the cost of sending out those letters, the cost of setting up a call center to field questions, the cost of providing credit monitoring, the cost of covering the identity theft as a result, all of that is all going to be part of this incident response. Bucket number 2, really just regulatory, right? So if we have any kind of regulatory bodies that we're beholden to and they conduct an investigation and we need some legal counsel to guide us through it, and then we're assessed any fines or penalties, that's all covered by the policy. Cyber crime, and we'll touch on this again because this is an evolving space, but paying of the ransom in the cryptocurrency, that's covered by the insurance policy. Social engineering, if we do accidentally pay somebody we weren't supposed to. We had a JKJ client pay $2.4 million to somebody who they thought were Sodexo, and it was not Sodexo. I don't mind telling that story only because the good news is they actually got it all back, and that is not always the case. But that's a real example, and we live those, unfortunately, very often. And then business losses. I've mentioned before the idea of downtime, being down for that average of 19 to 23 days. Well, what does that look like to your organization? If your EMR or EHR system were down for that long, at some point we may be in a position where we're transferring residents to receive care from an outside facility. And if we're not caring for those residents, we're not billing and we're not getting paid. So if we start suffering revenue loss as a result of a cyber attack, there's actually coverage intended from your cyber insurance program. And to take that even a step further, if during that time you transfer folks out, 2 weeks later, you're back up and running. You're like, hey, everybody, come on back. Does everybody come back? There's the possibility some of those folks that have lost faith and trust in your institution and they say, hey, I'm sorry. I'm moving mom to somewhere else because I no longer feel secure here. Thank you, but we're done. Now we're losing money in the future after we're back up and running. Now we're going to continue to suffer revenue loss. So there's something called reputational harm built into policies to really cushion you for that. So the cyber piece is really comprehensive and really can make or break an organization's resilience, right? Being able to sustain and recover.
You made a good point that over the last 12 months, it seems as if IT directors and other, how do I say it, non-insurance folks at the organization are getting pulled into the insurance decision-making process, or at least for the underwriting process. And what we've seen from our end is that, the market in the cyber world has been turned upside down for many, many different reasons, some that you've already identified today. So, as we go forward and knowing that the carriers aren't just going to come and announce that they're giving you the best possible package, and the limits are perfect and the coverage is robust. That's not their job to do that. That's the broker's job. So what are we telling our clients today with regards to cyber insurance and, what to be on the lookout for on a go forward basis?
Yeah, a lot going on. So, for a while there, cyber insurance was the gold rush of the insurance world. So all the carriers loved writing it. They were all making a ton of money. And then, the chicken comes home to roost during COVID. Tons of incidents start occurring. So what does that mean? It puts pressure on their profit margins. So how does the insurance world respond? In multiple ways. They start charging a lot more money So the same insurance policy you bought last year is going to be more expensive this year. They start modifying terms and reducing their exposures. So that means they're going to put sublimits on coverages that are most often used, or large deductibles, or other types of penalties. And then they're also going to underwrite a lot more closely. So this is where my IT friends are getting pulled into these discussions. They're asking a lot more questions. They got a lot smarter about this quickly. Previously, we used to be able to get a cyber policy for an organization by answering 5 basic questions. And I will tell you, none of them had anything to do with your cybersecurity posture. Now, IT needs to be involved in the application process, because the questions are very technical in nature. They're still not perfect. If you guys have gotten involved with these, you know it. They're not always written well. Sometimes it's as broad as like, do you have MFA? Well, I don't know, where are you asking me, right? The insurance company is getting better. They're not all the way there yet, but leaps and bounds from where they were before. And if you don't check the boxes in the ways that they're expecting, they're not offering coverage, or they're offering very reduced terms or much higher rates. So your posture does have a direct impact on your coverage today. Things we do need to think about though, am I buying enough limit? Right? Is my $1 million policy sufficient for a healthcare organization? I will tell you, those days are gone. $1 million in the healthcare space is no longer sufficient. We need to be at higher limits than that. And this is just an example of a data breach calculator. You can see the ransom paid out was 500,000 at the bottom. The business interruption was 1.5 million. And then the crisis management and the fines and penalties rounding out a couple more $1 million there. So not every situation certainly reaches this level, but it could. So it's really, really important we have proper limits. Extortion. A lot of calls from different lawmakers in the last year to say, hey, you can see it in the news sometimes. There'll occasionally be an article that kind of blames the insurance world for the ransomware issue. And they said, well, if you guys wouldn't keep paying them, then we wouldn't be perpetuating the issue. So certain lawmakers for a time were saying, hey, let's ban the right to pay ransoms. Now, as it stands today, there's an organization, a government agency called OFAC, the Office of Foreign Asset Control. You may not just pay any ransom. There are certain sanctioned criminals that we're not allowed to pay, but generally speaking, it's permissible, and it's also insurable. So if we were to stop the right to pay, I personally view that as punishing the victims, right? Like, nobody wants to suffer a ransomware attack, but if you do, and you really truly determine that your best recourse is to pay, it would be a shame if the government stands in the way of that. Instead, let's go after the criminals and the perpetrators of this. And so that's where I think we're going to see continued regulation around cryptocurrency, and tracking that and trying to identify these criminals. That said, extortion demands have risen, right? You're in the hundreds of thousands. The insurance companies are footing the bill. So you are seeing a lot of coverage changes here, reductions in limits, higher deductibles, co-insurance penalties, like 50%, saying whatever we pay, you pay half of the demand. Another piece to consider, what does your network and your infrastructure look like? Is it hosted, or is it on-prem? Because when we talked about that business interruption piece, the downtime component, well, what if you're down to no fault of your own because your cloud service provider, your SaaS provider is down, your EMR that's hosted by somebody else is down? That's not your fault. The insurance companies sometimes distinguish between what is on-prem versus what's hosted. When they ask you these cybersecurity questions on an application, they're underwriting you. They're not necessarily underwriting all of your vendor partners and how they manage cyber. So some will distinguish that and say, well, I didn't underwrite them, so I'm not giving you the same coverage for if it's a dependent risk. So you're dependent or contingent upon somebody else. And it's something you need to keep an eye on depending on how you're set up. Reputational harm can be really valuable. Bodily injury. So those examples that I mentioned earlier in the doom and gloom session of, people suffering bodily injury or death as a result of a cyber attack, much more plausible in the healthcare setting. There's potentially coverage you can get on your cyber policy for that. Certain cyber policies, and Raf, you mentioned this at the beginning, right? We used to cover cyber as maybe on the GL policy. Well, guess what? A lot of our general liability, our professional, our med mal policies exclude cyber. So if a cyber attack causes death, where do we get that coverage? So having it on the cyber program can be really important. Social engineering, similar to extortion, because they're happening a lot of reductions there. You got to keep your eye on it. Hardware coverage and betterment. This is the idea that a cyber attack actually causes damage to the firmware of your devices, whether it's your laptops or your servers, and they become unusable. Sometimes this is called bricking coverage. So covering the cost of replacing that is going to be part of the cyber policy. It is not on your property policy. There was no flood, there was no fire, right? If it's truly from a cyber attack, the only way we're covering replacing those devices is on the cyber. And not all policies have this, or that's significantly sublimited. So we have to keep our eye on it. Betterment just means it gives us some cushion to actually buy the better version of that technology today. If our 2008 server goes down as a result of this and we need to replace it, we may not buy the 2008. Maybe we're going to buy the 2020 now. Evolving regulations. Regulations really drive cyber. So we have to keep our eye on how those things change. So a good example is biometric data, how that's becoming more ingrained into privacy laws. And then, unfortunately, as I had said, the same policy you bought last year is going to be more expensive this year. So as ransomware attacks increase, cyber rates are going up. So you see insurance rates are just increasing at double-digit rates right now. I have had some organizations experience triple-digit increases in terms of percentages. It's really a strained marketplace, and I'm hoping we're going to start to level out a little bit more now over the next 12 months. We're going to see increases, but hopefully not to the same extent.
And beyond the pricing, really, there's been more stringent requirements with regards to the scrutiny that the underwriters are really putting on the insureds. So talk to us a little bit about, what are those new requirements that we're seeing down the pike?
Yeah, you nailed it. So keep an eye on the regulations, but here's where my IT guys get to shine. To be insurable is a lot more difficult now than it was a year ago, than it was 2 years ago. So what are the types of things they're looking for? I mentioned multi-factor authentication. Excuse me. So where? They really want it in 4 key areas. Area number 1, email access. This is to prevent business email compromise. Not all of these controls are just ransomware focused. There's other incidents out there. Number 2, remote access, right? So your remote workforce. I'm currently working from home. Do we have MFA for my VPN back to the office? That's essential. You cannot get insurance coverage today without that for the most part. Area number 3, my IT guys, the privileged accounts, privileged or admin access, those that can actually make changes to systems. We need extra security on those more privileged accounts. And then area number 4, access to our backup files. We want to make sure that those are truly safe and secure, offline, separated from the rest of our network, so that a ransomware attack of our live environment does not also corrupt our backup environment. So that kind of hits actually bullet number 3 there on the left. Segregated backups have to be fully and distinctly separated from the network, whether in a cloud environment or offline. Secured remote connectivity, so no publicly enabled RDP. The insurance companies have really gotten more sophisticated, and several of them will run scans of your public facing network, and they'll be able to detect if you have open ports. Some of them even detect if you have vulnerable versions of certain software. So, certain firewall appliances, they may raise a flag and say, hey, you need to upgrade this because the version you have that's publicly facing, we can see has the vulnerability. Employee training, right? Employees are the gateways to our organization. And again, for the IT folks, we can do our best trying to secure the organization, but somebody's still going to do something dumb. Somebody's going to click on something they shouldn't. So as much as we can educate our user base and create a culture of cyber awareness, cyber security, right? A skepticism that we stop and we think before we click on something. If it seems a little sketchy, we stop and we think before we send money if we're not certain it's to the right party. Those things are critical. And I would tell you, this is the number one area I would tell people to spend time and energy and money. Train your employees. Insurance companies are also asking if you have a cyber-specific incident response policy, right? Have you actually thought through what you would do in the event of an incident? And I will say this can save you hours of time from running around like a chicken with your head cut off, in the event of an incident, right? It's chaos, it's mayhem, it's high stress. So having a plan in place to say, okay, here's who we're going to engage, here's how we're going to communicate, and these are the steps we're going to take as we work through this. And printing that out and having it somewhere, right? If it's on our shared drive and our shared drive is encrypted, we can't access that policy and it's no good anymore. So also making sure we have physical copies somewhere. Then there's the technology piece, right? They're going to ask about, do you have some of the latest and greatest technologies? Do you have next gen antivirus? Do you have an intrusion detection system? The next big wave we're going to see is going to be EDR. Do you have an endpoint detection and response system? Different than EPP, different than endpoint protection. This is going to be EDR. They're going to ask about encryption. Do we encrypt data at rest on our servers? Do we encrypt data, on our laptops? Do you have crypto locker on there? Are we encrypting it in transit over email? How are we managing patches? What's our timeline for deploying patches for known vulnerabilities? They want to see that that timeline's pretty tight, right? And you guys know it's a balance. You don't want to be necessarily the first to deploy it because a patch could also crash your system, but they do want you timely patching of things. And Log4j is a perfect example of that. Everyone wanted to get that out very quickly. And I mentioned this before. Do we perform any third-party assessments? Do we have anyone do a pen test? Do we have anyone do a vulnerability assessment? Those can be to varying degrees. So there's some flexibility and wiggle room there, which is nice. And then again, that supply chain management. Have you actually thought through, how you're going to manage your supply chain and what they have?
So the pièce de résistance here is our top 5 tips, Alexandra. And all the stuff that you're talking about, yes, it's great for the organization from a risk management standpoint so that they're best prepared, best protected. The added bonus, though, is that all of this stuff, we as your broker are going to be selling it to the insurance carrier just as much so that they can get outside the box considerations when it comes to premium, when it comes to what coverage is being provided. So talk to us real quick about the boiled down top 5, maybe 6 tips that you have for us.
Yes. And yep, this is our last piece here, guys. And I promise we'll get done before the hour. And if you have any questions, I would welcome them. So my top 5, right? All right. Prepare to meet those insurability requirements. Do the audits of your systems and see how you measure up to the things that I had listed in the green box on the last slide. So what I'm talking about here, right in the middle. How do we fare on this? And there's a few more we can add, but these are really the most critical ones. But we have to prepare now because trying to scramble at the end to deploy MFA on our on-prem Microsoft Exchange is a lot more difficult than if we have Office 365 and we can just turn the switch. You want time and ability to do that. And then, of course, manage our access and our patching, right? So how are we managing access to the organization in terms of administering it? Do we abide by least privilege, only giving people the least possible privileges they need to do their job? How do we terminate access? How do we manage vendor access? And of course, patching, right? For all the reasons we talked about. The Equifax breach that dominated the news in 2017 was because of an unpatched system that had a known vulnerability and an available patch to address it, and Equifax just did not deploy it timely. So those are some real basic cyber hygienes that we all need to continue to do. Employee training. I love this comic on here because it's an exact reminder, right? In this corner, we have firewalls, encryption, antivirus software, all the great technology in the world. And in this corner, we have Dave. We all have Daves in our organizations. We may even be the Dave one day by accident, but let's try not to be, right? So let's train our employee base. I had said before, I think that's one of the most valuable ways you can actually spend time and money. Review your insurance coverage. So if you're not involved in the insurance process, get involved. If you are involved, get a better understanding. We have to make sure you know what you're buying and you know where the limitations are because this stuff is really nuanced and it's evolving very quickly. JKJ is here to help you with that. If you want us to take a look at your program, we're happy to do so. And then prepare. Create the policy. Test your backups. Too many times I've had a ransomware attack and my client's like, yes, we have backups. And they go to try to run them and they're blank files. The file ran, said it ran, but it didn't actually pick anything up. So how do we make sure our backups aren't corrupted? Test them. Tabletop the policy. So I said, not only create the policy and print it out, but let's actually put it to the test. Let's have that conversation, get everyone in the room and go, okay, we're going through the incident. How does this actually measure up with how we would really respond? if this happens, what would we do? And you start to actually flush it out into a policy that's truly meaningful for your organization. And Raf, you called it. I do have a bonus sixth one. And it comes back to our people, process, and technology triangle. This is a process one. This is a no dollar cost to your organization way to reduce risk. Have really, really tight financial transaction authorization and change procedures. So how do you authorize transactions and wire transfers of certain thresholds? Do you have dual authorization, et cetera? But even better than that is, what do you do when someone tells you it's changed? Do you pick up the phone and call them and have them verify to you what it's been changed to? Do you call someone different than the person that requested the change, right? Really sound procedures there.
Well, Alex, thank you very much. I appreciate all the knowledge that you're passing down to us. As you mentioned, we're going to keep it open for some Q&A if anyone has any lingering questions. What I will reiterate is what you said already is that, with cyber being probably the one exposure that is changing more rapidly than any other I can think of, it's incumbent on us, the broker, but then also the provider member, to stay ahead of what's happening out there, and sitting back and relying on password protecting your Wi-Fi only and calling that your security is not going to work. And that's why we're happy to see a lot of these IT directors at the communities get involved a lot more. So if there are any other questions that we could answer, by all means, we'll open up the floor here. Otherwise, we will be happy to put the presentation over to the Leading Age Maryland staff so that they can put this and the recording up on their website. So with that, I will pass the mic back to Sarah.
Thank you so much. I really appreciate all your time. I do not see any questions in the chat, but would love to hear from any of our attendees today if you have any questions.
And we will be in attendance at the annual meeting in a few short weeks if anyone wants to talk insurance. I don't know why you would, but we're here there.
Yes, Raf, thank you so much for giving a plug for our annual conference, May 3rd through the 4th. Grateful that you guys are going to be there.
Alex, this is Bart. That was a fantastic presentation, and I have to admit, as I sit here and I run an organization of 6 folks, and I spend a lot of time thinking about IT. We outsource it and have various controls, but I always sit here and say, at some point, something's going to happen, and what am I going to tell my board that we did? And the reasonable care standard comes up, and that this is important information, and we certainly, when we do bond issues, we are asking our hospitals in the risk disclosure to spend a whole lot more time talking about cyber risks and their controls. So this comes across. I don't have cyber insurance for our organization. What percentage of them do you think institutions are buying in cyber insurance? How deeply penetrated is the market?
I would say most are today, especially if you're in the broader healthcare space or touching the healthcare space at all. But even outside of that, the folks that were more resistant to that in the past were really on like the manufacturing side, right? The folks that said, hey, I don't have a ton of personal information. I don't have a breach concern. They get in here, I don't care, right? The change has been ransomware. It's just leveled the playing field that everyone has to care about this, because everyone would be concerned if their own network was down. So I would say penetration wise, it's pretty significant. But for an organization of your size, not nearly as much as when you get, into the 25 plus employee range. But that's something we can help you with if we want to talk offline.
I think that people maybe spend the time to justify why they don't have it. Personal identification information, number of employees, the effort. Let's invest our time on putting in place the controls so that we're insurable. Then if we're insurable, that's great. Then we're doing the right job. And then we're just managing, all right, maybe down the road, we're going to pay some money and be exposed versus, are we willing to self-insure that risk?
Exactly.
It does appear that what having a policy does bring is a very critical component of a DRP, the incident response, where that you who do you call first is always what you're thinking of. And I guess having those professional resources is something that makes you sleep better beyond just the financial loss component.
You nailed it. It's providing your incident response in the absence of incident response, for sure.
Yep. Sarah, great job organizing this educational content and making it available. It's a great resource. Thank you so much.
Yeah,
My
thank you
pleasure.
again. Yeah, thanks for having us. And yeah, I guess, Sarah, like you said, we'll shoot you the presentation, and feel free to post it up, and we'll go from there, I guess.
Okay, sounds great. Thank you so much. Glad everybody could join us and hope you have a great rest of the day.
Thank you, everybody. Take
Thanks.
care.
See you now. Bye.
Thanks, everyone.